Here in Davos, Switzerland at the World Economic Forum, we continue the conversation on commodities with Cynthia Carroll. She is the CEO of Anglo American, one of the world's largest mining and natural resource companies. Cynthia, before we get into a broader conversation about what's going to happen to the commodity markets, I want to talk to you about Australia. You've got some coal operations. They were affected by the flooding in Australia. How extensive is the damage? How long is it going to take to fix? And have you any idea what it might cost?
Well, first of all, it's only early days, and we're still getting back to normal operations there. It has had a devastating impact, and it really has represented human tragedy in Queensland on a broad basis. We've actually moved towns of people in Australia, in Queensland, and almost all of our mines now are getting to normal operations. So we haven't yet established what the cost impact is, and we will not have done that until the end of the month or so. Okay,
but getting close to normal operations. Let's pull back for a moment. How long can the bull market in industrial commodities last?
We think that the mining industry is really the lifeblood of the 21st century. The mining industry represents production of copper, say. Copper's used in wiring and cabling in our houses. About 40 pounds of copper is in every car produced today. There's about 80 tons of copper in the Statue of Liberty. 98.
We might not be building new statues of Liberty, but we're building more cars.
Well, 98% of iron ore produced today is going into steel making. Steel making is used for the construction of buildings, of airports, of railroads. So, I mean, the upside, the outlook is very strong. And I was in China about 10 days ago, meeting with producers of cranes. I went to a shipbuilding operation, one of the largest in the world, steel manufacturers we met with, and economists. And there's one economist by the name of David Lee who's talking about demand growth for our commodities being beyond the year 2030.
Oh, hang on a minute. I need to ask you a question about China. What about the prospects for inflation and a potential hard landing for the Chinese economy? How disruptive might that be to your company's plans?
Well, obviously, the commodities that we produce very much depend on the continuation of that demand growth, and followed by India, followed by the other emerging economies. So we don't see a settling down. In fact, we see a continuation of that thrust for demand.
And one quick last question. How well is the market pricing right now real supply and demand, and how much of what we see in nickel and copper prices, for example, do you think is speculative? It's a question people continue to ask as those prices head higher.
Well, the challenges in our industry, and we, Anglo American, believe that we're best positioned to satisfy the demand going forward, given the resource base that we have in terms of the life of mine. I mean, in some cases, in the platinum side, we have over 100 years of resource to satisfy that demand. We're right now starting up a mine every 6 to 9 months going forward the next couple of years. We're, as we speak, starting up one of the largest, what will become the largest nickel mine in the world, producing about 40,000 tons at a cost about $4 per ton, and that it compares to, today's prices of, say, 3 times that. So we think fundamentally that the outlook on the prices will continue to be very robust because of the challenges to bring on new mines, whether it's backed up by infrastructure or the timeline, the longer lead times that it takes to bring them to fruition.
Cynthia, thanks for joining us here in the Inside Track. Cynthia Carroll, the CEO of Anglo American.